Hey guys, welcome back to the channel. Today we're conducting some Boohoo stock analysis. The ticker is Boo. You may have seen this one in the news recently. It's been absolutely hammered over the last 12 months or so, down 65%, and I'm still struggling to work out exactly why that is. Its fundamentals are still pretty good. They stack up very nicely. It has plenty of cash on hand. It has suffered some headwinds due to the global pandemic, and we'll go into them a bit more later, but I'm still struggling to work out why this company has been as hit as hard as it has. If that sounds like something you're interested in, please smash that like button, consider subscribing to the channel, and I'll see you in there. Hey guys, welcome into the video. So here we are on the landing page for Boohoo Group. As you can see, shares have tumbled 3.4% today, and over the last year or so, especially over the last 6 months, the shares have tumbled practically to an all-time low. The all-time low being 97 pence. Current share price is 104. This has came an awful way down from £3.10, and if we go back a little bit further, it is peaked well up by the £3.64 over the last 12 months. So current revenue for this company is approaching £2 billion. The market cap for this company is currently 1.3 billion, so that in itself there should suggest that there's actual value to be had in this company. It has sunk 15% 4 days ago according to Yahoo Finance. When you look at the earnings of this company since 2018, it has gone up and up and up, and 2021 so far it is at 1.75 billion, and it is in earnings territory. Is actually making a profit, and it does have plenty of cash on its hand. Its recent acquisition of Debenhams is testament to that, and so forth is acquiring its new headquarters in London. More on that later. If we delve into the financials of the company, we can see that over the last year its current total revenue is actually 1.9 billion, and then going back to 2020 it was 1.2 billion, back in 2019 800 million, and back in 2018 500 million. So that is impressive growth, guys. As we can see it on the chart over here, and it has actually been profitable for the whole time. So yes, there are some headwinds coming up for this company. It highlighted them in its recent Q3 trading update, which I'll go into in a minute. Now, going on to the analyst coverage of this company, even today it still says 14 analysts still have it as a buy, 4 have it as a hold, and then there's 2 that say that it is a sell. So not very many people think that it's a sell. It has a high price target of £3.60, a low of 95p, which really isn't that much lower than it already is, and it's only just touched on that just the once, and then it bounced back up to about £1.10, and it's been higher than that. The medium range is about £2.11, and that is, you guessed it, a 100% return on your investment from today's prices, and it could go an awful lot higher than that should the headwinds from the global pandemic and its supply chain issues clean up. So let's have a little look at that Q3 update. So it still says gross sales were up 28% in the 3-month period, net sales up 10%, and UK sales were up 58% versus 2021 and 102% up versus 2020, and net sales improving as well. If you have a look at that, there's considerably higher returns rate impacting its net sales growth and costs. We do know this, people are returning their party gear due to the global pandemic kicking on for longer than we thought, but eventually this is going to clean itself up. The global pandemic will eventually end, it has to, and the virus is getting more and more weaker over time according to some doctors out there. So international performance wasn't exactly spectacular either, but the group has a plan. You can see it in this earnings thing here. The group has a plan. It has a strong balance sheet with over 170 million in net cash, of cash liquidity should I say, and net cash of 70 million, and it continues to invest in its distribution and in its headquarters. So the guidance and the outlook, net sales is expected to still be double digits, but significantly lower than its 20 to 25% growth. However, growth is still growth, guys, and we will still see this company kicking on and earning more than it did in the previous quarters and the previous year, and that is incredibly important. But the headwinds are there, and that is why the stock has quite rightly taken the hit that it has. I just think that it's been hit rather too hard, especially on the back of the scandals last year in the Leicester town, where it was essentially paying way below the minimum wage, or a supplier of it was doing that, and that has adversely affected the share price. But all of this is like short-term noise in the long-term trajectory of this company. I think it has the fundamentals to do really well. It has a good cash position, it's still going to grow, and I think the share price could significantly recover quite quickly over the coming months. So if we have a look at the interim results, this is dated back a little bit, but we still have just what I was trying to talk about there. Strong growth, doubled its market share in the UK and the US. It has a distribution capacity capable of 4 billion of net sales, but that is also increasing, and they're committing to growing the company to 5,000 jobs and invest 500 million over 5 years. There are headwinds out there, which is what we've already talked about, and then you've got the returns also affecting its net sales. But if you look at the long-term fundamentals of this company, I can't go through every single slide in this presentation, unfortunately. This is more talking about the branding here, but it is growing its influence in the space. You can see here versus year 2020 versus year 2022, the amount of social media following, active customers, new lines per week, online fashion stores, all increasing all of the time, which is absolutely fantastic. It is working to sort its supply chain out, but like the rest of the world, it is struggling, unfortunately, with doing that. And we're just going to scroll just down to where it highlights that in this quarterly, this 6 monthly interim results page. We're just going to keep scrolling here, and I will get to exactly what I was talking about. So the short-term headwinds, this is still factoring into the share price today. Ocean freight container rate is up 400% since 2020. Air freight is up 300%. This should eventually equal itself out, but obviously that is going to affect Boohoo's bottom line, and they need to obviously manage this and do what they can to mitigate and avoid it. But the long and short of it is they do have shipping costs, they do have air freight costs, both in the delivery of their finished items and the delivery of the raw goods that they use to obviously manufacture the clothes and bring the clothes into the UK in the first place. So there has been a hit to some profits, we are fully aware of that, we have seen that, but there is still an awful lot of good things for this company to have going forward. You can see it here. It is just every metric that you can measure this company by, it is still going up. It might not be going up by as much because that is what has happened due to the bottom lines increasing, but it is still 100% going up. And then I'm just going to go down now to the acquisition of Debenham. So Debenhams was a high street chain acquired for a steal, basically for approximately 40 million. And they essentially closed all the high street stores. Unfortunately, that led to job losses, but they've got the online presence of Debenhams, and they come up with a plan. They come up with a plan to get that sorted, and that is nearing fruition by the end of the year. So if we just scroll down again, sorry to keep you scrolling right here, but we'll get to the Debenhams plan. So in January, they acquired it right at the very start of the year, and we're just getting towards all of this coming together and even more revenue being generated. So we're nearly there essentially, right up to Christmas. This will be felt in next year's quarterly results, and then the following year's results going forward. There is a lot to be had from Debenhams' old customers essentially, and they've got a lot of brands going forward anyway, but Debenhams is just helping that to helping along with that. So if you just have a look here, you've got Karen Millen, Coast, Pretty Little Thing, Oasis, Debenhams. These are all the brands that Boohoo owns pushing forward. And this is the performance over the last 5 years, dating back to 2017. So the profit before tax right the way up at 125 million for 2021. Adjusted EBITDA is 175 million, off revenue of 1.75 billion. So they're pushing on, they're kicking along, and they're doing absolutely fantastically well there. So they've got enough money basically that they're happy to invest 72 million in their London headquarters, moving from Manchester to London to bring everything under one roof, which is absolutely fantastic. A great show of confidence in the company. Moving to London is always a bit of a thing because that's where everything is at essentially. Loads of companies take their headquarters to London. It is expensive, but it's where the best talent is for the business going forward. So I believe that that is quite a shrewd move by the company's management. So thinking back to where the share price could be in a few months, you've got the Christmas sales. People are going to be buying stuff for Christmas. Yes, things are 100% going to be affected by the global pandemic. When you look at the sort of peak share price this had at what, £4.12p, it's not going to get back to that immediately. It is going to take time, but £1.04p for a company of this calibre, even with the little niff-naff and trivia that it's got to deal with, is still an absolute steal. This could easily bounce back to £2, £2.60 a share very, very quickly, offering a nice 100 to 200% return on your investment without even trying too hard. That's where I'm at, guys. That is why I'm very much interested in this company going forward. And there we have it, guys. I believe that Boohoo at these prices is a fantastic buying opportunity. It's a golden opportunity to double your money over a reasonably short amount of time, not having to wait a spectacular amount, because I believe that it won't stay at these prices for very long at all. It can't get too much lower. It is already trading at well below its market cap in comparison to its revenue. Its market cap is well below revenue, and it's only at approximately 8 times its gross profit, its EBITDA, which is also high value for this company, especially in the online clothing consortium space. So that is a fantastic opportunity. I hope you've enjoyed the video today, guys. Do please smash that like button and consider subscribing to the channel. Catch you later.